tried fixing the bot earlier today, blocking my sound, but no. In case you guys are wondering, this is why you'll always see me leave before joining again as soon as the music ends. How are you guys doing? Had a great weekend, I hope? Awesome. Thanks, Justin. I am doing great. We're going to get right into it. As you guys might have seen from the announcement I made, I will not be trading any of my live accounts. Well, actually, that's a lie. I have 2 prop firm accounts, but I do not regard them as trading. These will be purely gambling. So yes, I am going to be gambling 2 trading accounts this week. There will be a lot of volatility, and I want to take advantage of that volatility, but not on my accounts. I'm not willing to take that risk. I don't expect nice PA. I expect aggressive price action. So no trading on my live account as well as all my main prop firm accounts, but I did pass 2 accounts last week just for this specific purpose. Did want to let you guys know. Other than that, I'm going to be demo trading the rest of the time. Speaking about this again, and I'll bring this image back here just so we can see it for our week's news. First of all, daylight savings shift usually leads to high resistance conditions for 1 or 2 days. And now also we have presidential elections this year. Other than that, you also have the FOMC press conference on a Thursday. So it's going to be a weird one, if I can say it like that. It's going to be one hell of a week. It's going to be very aggressive. I do not expect nice PA. I do not expect nice delivery at all. So view this outlook at your own risk, but I am going to be doing this outlook based on the fact that I don't anticipate to be trading throughout the week, but how I'd like the start of November to unfold, if that makes any sense for you guys. But if we were looking at any other week, we'd be looking at Tuesday and Thursday as trading days. So in that regard, there will be price action reviews on those days just to keep providing content to the community and to YouTube. I want to revisit what we looked at in our last weekly outlook, right? Looking for November specifically to open low. Last week was week 5 of October, all right? Even though we had November 1st on Friday, it does not count as the first week of November. Do you know why some red folders are now orange? Because Forex Factory wanted to. That is the truth. And until I get some competent news data where I can run statistical analysis on and I can provide that news data directly in the Rise Statistics app, there's nothing I can do about it, right? So they changed some folders. All I can say is use the previous ones. So, for example, I think it was Consumer Confident and University of Michigan. Those 2 were the main ones that were switched to red and are now orange. I still regard them as high impact news, right? Hence why now when you'll see me sharing news, you'll see the orange news included as well. Fair enough. Doesn't make a lot of sense why they did, but they did what they wanted to do. Returning here to the fact that we are now going to start the first official week of November, you would be looking for that week to form the low of the month. And this statistical analysis is based purely and only on data from election years. What you see here is that the first week of the month has the highest probability, followed by the 3rd week of the month, of forming the low, right? And pretty huge statistics the majority of the time, right? 60%. And usually price tends to expand all the way up until the end of the month, which are the highest probability, with quite a big probability of having a bearish month as well, right? We're looking at about 65% chance of bullish and 35% chance of bearish. I tend to disregard these numbers just due to the fact of how in context it is, right? You have to bring context to establish a clear objective, a clear bias. But these stats were shared in a Twitter post that I recently retweeted. So if you guys want to see them again, they are available on Twitter. Other than that, same plan as we've been looking at for the past 2 weeks, right? If you guys remember last week's outlook, we did perfectly what we wanted to see, right? Went and traded to previous week high to then dive lower. But what were our lower objectives? Of course, short term was previous week's low, right? We're looking at this. If perhaps I do this, you'll see this is the week, Monday, Tuesday, Wednesday, Thursday, Friday. Previous week low was a clear objective, but our main objectives for the longer term were these levels. These are consolidations. They might be easier to spot if I go down to the 4 hour, just for visual aid for the people that aren't used to this. And I was backtesting this. Let's remove it. These are high probability liquidity pools, right? They're areas with equal levels, consolidations in price that we are going to return to before continuing higher. That is the plan. That remains the plan. None of the aggressive downside PA of last week changes my idea in regards to this. The only thing that could happen is that we don't form the low of the month in the first week, so this week, and we form it pretty much the week after or all the way to week 3. As we just discussed with the stats, these are the highest probable. So it's either week 1 or week 3 that are the most probable outcomes, and then expansion to the upside all the way into the end of the month. Continuing further down the line, I'm not going to talk about my long-term objectives because they don't matter, but I would like to see upside in the short term. What's important to note here is that every time we have an idea, every time we have, right, I'm doing these outlooks, I'm analyzing the charts, I always have an invalidation level. Now seeing all of this built up low resistance liquidity and referring to our most recent expansion range to the upside, right? So looking at this range, I always draw them the wrong way. Something I noticed. Sorry about that, guys. Looking at this range, this is my invalidation point. I want to see us sweep this low and not go aggressively through it. But due to the fact that we have inefficiencies right to the left of it, I can allow it to trade into this fair value gap. And also, if we're being a little more specific here, some things that, well, you guys voted for more complex analysis, right? I am looking at this balanced price range. This area is important to me. It is an area that we have consolidated and expanded through in time, and that we have formed multiple fair value gaps within. So to me, this is an area where I can see price gravitating towards, but I would still be looking for upside here up until we inverse this gap. And I want to talk about this a little more from a trading perspective other than an analysis perspective. So I'm looking at this gap right here, and I will remove the balanced price range and also move the arrows for a second. This gap, if we trade into it, I'm still looking for longs. What if I'm wrong? What if this was not a retracement objective and we're actually just heading there because we're going to keep going down all the way down to this liquidity, perhaps this liquidity next, which is an objective, an area where I'd like to see price gravitate to at some point, right? No clear timeline on it. Well, I will be wrong, right? Yes, okay. But from a trading perspective, what does this look like? This looks like 1 or 2 losses. How do I know this? Well, it's very simple. My bias will become long as soon as we sweep this and tap into this. It will not take more than 2 days to inverse this fair value gap if we do. How do I know this? Well, I'm taking statistics into account, right? I'm looking in the past, looking how long we tend to stick in these daily fair value gaps. 1, 2, 1, 2. Not at all. 2 days inside of an order block. Here, traded into it. We did return to it, and right here I would have waited for this liquidity. So 1, 2, 3, revisited it a little bit. Here, 1, 2, right? I'm showing a lot of examples just to give you guys the backing behind it. So what I'm looking for is for us to dive into it, and then the next day to dive out of it. Perhaps the day after is allowable. Well, if it doesn't do that, I am wrong for 1 or 2 days, which means 1 to 4 losses based on my rules. But I usually won't go for a second setup if the first one failed and we're expanding and my bias is clearly wrong. I'll just take a step back. And then once we invalidate this, I can see, okay, well, turns out we're still bearish. So then the next day, I adjust my bias, I adjust my plan, and follow along. So I do want you guys to keep this in mind. You need to adjust to what you see, but more importantly, you need invalidation levels. And I noticed that this is something that I don't really share. I tell you guys that if we do this at this point in time, I'm going to adjust, but I don't explain to you guys why. So this is something I'm going to try doing more of in the future. And in this case, for my bearish idea, I'm looking for clear expansion. I can allow a retracement into the premium of our latest range just because we expanded very aggressively. So I could see us digging back into this fair value gap first, but I want to see clear expansion to the downside. That is my one and only plan. Just started the month, right? If we have, this should be the monthly candle. Yes, we have the monthly candle right here. I want to see expansion lower to have a long open low. If we spend a lot of time to the upside, perhaps forming SMT at the upside, well, then I will adjust my plan to look for downside distribution, meaning that looking for the high of the month to be made low in the month and then having an aggressive pullback, but taking elections into consideration and more specifically the profiling of it. So if you look at seasonal charts, right, there are a bunch of examples on my Twitter feed, on Rise Statistics Twitter feed. You look at seasonal chart, it gives you average movements, but that can be used for profiling. So what do we usually do on November, but more specifically election years? We're bullish. It is that simple. We're usually bullish. We open low very aggressively, either right at the start of the month, week 1, which is this week, or closer to the end of the month, which is week 3. And then we close bullish. Those are the statistics, and they align with my analysis of the charts. So I don't need to know more. That is my plan and validation level. If anything happens, I'll be ready to trade retracements to the upside. As I said, right? For example, I can allow a trade to go up here. Well, I can take a long to that area. But I know that for the next weeks, right? A week or two, we'll see on the, depending on what the week does, right? But for this week, if I'm trading longs, I'm trading retracements, which means that I will have more conservative objectives. I will have retracement objectives, and I will be more protective of my positions, which means putting them break even more quickly. Take profiting before I would usually do. And when I'm on side with my weekly plan, which means when I'm shorting, I'm going to look for more. This is where I get my 300, 400 handle trades. This is when the daily expansion aligns with the weekly expansion and that my bias is right. And yeah, that happens a decent amount of time, but not too often. You know, when everything lines up perfectly and you get that one beautiful entry, right? These are the home runs. But on a day-to-day basis, I'm going to be protective of longs and be very aggressive with shorts. Do you guys have any questions in regard to this outlook? We haven't been there for a while, but people on YouTube at least prefer these shorter outlooks straight to the point and not going too in depth. But I do want to bring these invalidation levels to you guys to just help bring a little more context, perhaps a little more educational support here. I don't see any of you guys typing, so I'm guessing it was pretty clear. Quite a small audience tonight. Thank you guys for being here. No questions. Awesome. Well, I wish you all a great trading week if you are. All that I ask, be very careful. Elections being like that, this is not what we call high probability conditions. This is what we call blow your account. So be careful if you are trading. I wish you luck. As I said personally, everything is stated in the announcement. I will not be trading unless I am gambling these 2 profit accounts. So I do not recommend this to anyone, by the way. You guys have a great night. Have a good week. We'll see each other back on Tuesday. Bye, guys.